What is up, guys? Taiki here, and in this video, I'm very honored to invite Justin Bram to the show. He has a great YouTube channel that I suggest everyone check out, and we're going to be talking about Ethereum, Ethereum farms, as well as Arbitrum farms, and why he believes Ethereum is going to be the chain that wins in the end. So thank you for coming on, Justin, and how are you doing today?
Good. Thank you so much for having me on, Taiki. It really is a pleasure. I've been watching your channel for a few months now. I'm in the premium Discord group and just get a ton of value of following you into farms. So really happy to be here.
Awesome. Yeah, thanks. So for those that don't know who you are, can you just give us a brief introduction of how you got into crypto and like what do you do right now?
Yeah, sure. So I got into the crypto space about a year and a half ago, just after the COVID flash crash. So I was working at Snapchat at the time, and I was fortunate enough to meet someone that was in the DeFi space, was looking to raise money and start a company there. And at the time, I had never bought BTC, never bought ETH. Really thought it was mostly a scam, like I think a lot of us did. But I was fortunate enough to join on at the right time. Obviously, if you started getting into crypto investing in this space, then you had the best timing in the world.
Mhm.
So I was very interested in DeFi, just exploring different ecosystems and working on Brink, which is the project we're working on. So we're building an automated transaction network for Ethereum. And the most common use case for this is we're helping to enable stop loss orders, limit orders, automated liquidity management, and profit taking strategies and such. So I've been working on that. And then about 6 months or so ago, I realized that there were very few resources of folks explaining how actual protocols and projects in DeFi work and doing deep dives and reviews there. So I decided to start making those videos and building out community since. And it's been very rewarding just because I've been able to meet people like yourself.
Yeah, and you also have like a very vibrant Discord community, right? It's like the free Discord community. I think it has like 8,000 members or so. I'm also in there as
Uh,
well.
yeah, we'll get there someday. We have about 5,000 now,
Okay,
but
okay.
yeah, yeah. I
Yeah,
like to think
that's
it's a great resource for folks. So
yeah, it really is. So I guess obviously your videos and I guess you also work on an Ethereum-based project, so you're biased Ethereum, right? So I have to ask this question just to get this out of the way. Are you an Ethereum Maxi?
yeah, so I'd say like it's totally fair to say I have a bias towards Ethereum. Like you said, I'm building an application built on Ethereum, although of course we could go to any EVM chain. And I'm most aligned with what Ethereum stands for now as far as like the heavy commitment to decentralization. And I think Ethereum has the best network of developers right now. So I definitely have a bias towards ETH. It's my largest position by far, so full disclaimer there. But I will say if like another chain like Avalanche became the default decentralized network and if Avalanche became the winner in 5 years, like I would be fine moving over to Avalanche as long as it hit those decentralization parameters. So hopefully my bias doesn't cloud my judgment. I like to think I'm able to look at the facts and kind of come to a reasonable conclusion that ETH is going to be the winner. And hopefully I can present that to your audience in this talk today.
Yeah, and you also like farm on Avalanche, Phantom, Polygon, right? So it's not like you just ignore like anything that's not Ethereum. You try these different ecosystems out and like ask yourself like, hey, like does this have a chance of flipping ETH in the next X years or something? Uh,
Yeah, so I follow Taiki into what he's farming. So I'm happy to farm anywhere. Farmed on Avalanche. I'm actually not farming on Phantom right now. I just didn't bother to move over yet. But if it continues to be a great ecosystem to farm on, I'll move there as well.
so I really like that approach because I also believe that like nothing is gonna flip ETH like as it comes to like smart contract platforms. But like in the short term, I am a profit maxi and I'm gonna rotate into these different EVM chains or like whatever like L1s if I think I can make money from it. So that being said, I know you have a presentation prepared for us. So can you just like, briefly go over like why you think ETH will be the winner?
Yeah, absolutely. Let me just share my screen here.
Yeah, awesome. Yeah.
Sweet. So in this presentation, my goal is basically to go over six core things. So I want to talk about why Ethereum is currently the winner, why I think it's the winner, and why I think will continue to be the winner, and also why Ethereum actually is really the only chain that has a plan to scale and can scale right now. Also, I'm going to briefly touch on the tokenomics for ETH, and then because hopefully after this video you might be very bullish on ETH, I'm going to show you how to get the highest yields for ETH. And then it wouldn't be a Taiki video if I didn't cover yield farming on Arbitrum. So Arbitrum is a layer 2 for ETH. Gas costs are quite low there, usually about $1 to $5 per transaction. So we'll go over some of the best farms there.
Awesome.
So again, I just wanted to have a disclaimer here about a bias, but we talked about that already, so I think we have that covered. So the first thing I wanted to focus on here is really talking about other centralized layer ones that are proof of stake layer ones really are not sustainable right now. So I've included Polygon here just because it's part of the Ethereum ecosystem. So I'm happy to criticize part of the Ethereum ecosystem when it just doesn't make sense. And the thing with Polygon is that you can see here Polygon collects about $50,000 per day in transaction fees, or 18 million annualized. But because Polygon is centralized, they push the cost down. Polygon POS actually spends over $400 million in inflationary rewards. So they're spending much more than they make from fees. And of course, this isn't sustainable, maintaining a net loss of 95%. Now, Solana is probably the largest competitor to ETH when people talk about scaling. And Solana advertises they can do 10,000 transactions per second, which is obviously phenomenal on paper. But the dark side to that is you can see they're spending $4 billion a year on inflationary rewards to incentivize validators to do this on $36 million of revenue. So it's a net loss of 99%. It's certainly not sustainable. And the fact of the matter is, like, people would not be on validators. People will not validate transactions on Solana for a loss. The only reason they're doing it is because Solana is paying them in inflationary rewards, which are not sustainable and really can't continue on. You may say, like, Solana can grow into this, they can keep scaling, they can worry about paying for the network later. But this is a very interesting model here to think about. So Solana would need about 150,000 transactions per second at the current fee just to break even. And obviously this isn't possible, and even allowing for this incurs more costs than we have right now when the network's only doing a few hundred transactions per second. So Visa has about 50,000, and it's hard to imagine that Solana would get to a break-even point of 3 times that. In addition, as I mentioned, the more transactions you have, the more bandwidth requirements there are from validators, the more state bloat there is, and the more, in general, higher system requirements for the hardware you have. And of course, all of that makes it more costly. So it's not like if we hit that level of transactions, it's suddenly feasible. It still just doesn't really make sense from a math standpoint.
Yeah, and sorry, just to interrupt you, I don't expect you to like show us like the source and whatnot, but at the bottom right, there's a source from Polina. I'll provide a link to that in the description below so you can like actually read it for yourself. But yeah,
Yeah,
so sorry to
absolutely. I'm going
interrupt
to
you.
share, no, that's a great point. I forgot to mention that. I'm going to share all of these links with sources with Taiki so he can post them in the description. And when we get to the yield and farm opportunities, I'm sure he'll link those below and I'll send everything over. So, yeah, and if you have any questions, I'll be in the comments too, responding to folks. So next up, yeah, as I said, like, Ethereum gets a lot of flack for being a chain that can't scale, but when you actually look at it, Ethereum is really the only chain that can scale right now. And there's a few reasons for this. So the first is that the rollups that we're seeing, and a rollup is like an Arbitrum or an Optimism, they're actually more scalable than even the most centralized layer ones. There's a couple reasons for this, but the main is that these rollups can really just rely on one single node and then actually depend on that layer one for the security and the decentralization aspect. In addition to that, as transaction volume grows on the rollups, the transaction costs actually decrease. So the reason for this is actually kind of simple if you think about it. If you think of a rollup, you can think of a bunch of transactions rolled together. And if we only have 10 transactions rolled together and sent back to ETH layer one and they're paying for that security, cost is only distributed among 10 users that are submitting transactions. But if we can bundle 100 in or 1,000 in, then you're socializing the cost of that, expensive Ethereum transaction, and really it's just much more scalable. And the last thing is we talked about that issue of paying for validators, paying for people to validate transactions and provide decentralization. Well, Ethereum, as I'll explain in just a minute, is the only network that's actually going to be deflationary, meaning that Ethereum can pay for its own security. And there's no other chain that can do that. And Ethereum has the advantage here is because they basically cap that base layer at, I think there's only 1 block per 12 seconds. So it's not intensive from a hardware perspective. And of course, the block limit is small, so you can't put a ton of transactions into an Ethereum block, which means, of course, right now, layer one is very expensive. So now this leads me to the question of what will actually happen to these layer ones like Phantom, Solana, Avalanche. Well, I think this is somewhat of a controversial view, but I look at this from a perspective of betting on a multi-chain future is in some ways betting against technology. If you think that one chain can actually can scale to be the global settlement layer, then in some ways it kind of makes sense that one chain would achieve that. It just intuitively, like in tech, let's just say we have one or two winners. We have iPhones and Androids, and then there's a long tail distribution of smaller players. And I think we could see that with blockchains. So as far as these layer ones go, I think the first thing they could do is kind of accept that from a tech standpoint, they're somewhat outdated and more on the obsolete side. And this isn't meant to bash any specific chain, but if we look at something like Luna and Phantom, the marketing there is incredible, right? Like they do a great job of building community, but the focus on technology really isn't there. And maybe that's okay, and maybe that's good for like certain use cases. This isn't meant to be bearish on Luna or Phantom, but the fact is like the technology that they are using is inherently outdated. And I think there's a second option here, which is not even bearish at all as far as like a Luna or a Phantom would go. And Luna or Phantom could become a great example of a layer two for Ethereum. So it's not impossible for Luna to become a layer two that depends on Ethereum security. And this would actually be a huge advantage for Luna, because now Luna, for example, doesn't have to pay for security. They don't have to worry about decentralization. All they have to do is focus on building the best apps possible, and that can rely on the Ethereum security. And they can still have the Luna token. They can still dominate with UST. I actually think it's a very bullish case for Luna, Phantom, and some of these other layer ones. So next up, I wanted to cover the tokenomics of ETH. I think a lot of you are probably familiar with this, so I'll just be brief with it. But ETH is kind of tied with BTC as the best store of value. I know all of you love Taiki's videos, and he always talks about like if you stack ETH, if you stack BTC, you can always use that as collateral. You can put it in Aave, you can put it in Compound or whatever you're using, and you can borrow against that. And that really is true. So right now, ETH is a great store of value. In addition to that, you can see that ETH inflation is almost at BTC's level. So with 1559, ETH inflation is about 2.2% right now because of EIP 1559 burns ETH the more transactions there are, and we have a very overloaded network right now. And BTC is, of course, at 1.8%. Now, with that said, after ETH switches to proof of stake, which is supposed to happen in Q1 of 2022, obviously it's possible that it gets delayed. Hopefully it doesn't. But after the merge, it's said that we will have a deflationary supply of ETH. The reason being is the Ethereum network doesn't have to distribute as much ETH to validators as they do to miners, because validating transactions and proof of stake is much less energy intensive than proof of work. Now, there's one other thing I think most people miss, and that's that ETH will be staked in proof of stake just because it's going to pay out so much. So after the merge, it's expected that ETH staking for ETH2 would give a yield of 20% or so, just because there's so few ETH staked right now. And if you look at this, you can see right now 6% of the ETH supply is staked. And for reference, 71% of Cardano is staked. So I think when ETH moves to a proof of stake model, we'll see 3 times as much ETH staked, maybe 5 times as much. It probably won't hit Cardano's level because there's a lot of other things you can do with ETH right now that you can't do with Cardano. But still, there's going to be a much lower circulating supply after the merge, which is, I think, important to recognize.
Yeah, I do want to comment one part on like the one thing you mentioned about like ETH also being a store of value. Like I used to believe that like, hey, like Bitcoin is the only store of value. Like why would I want to use ETH as a store of value? But as I start getting into farming and like you mentioned, like I can use Bitcoin and ETH anywhere, right? That's one of the benefits of, I guess, stablecoins too. But stablecoins, Bitcoin and ETH, is that if you hold them, like for example, USDC, you can use them anywhere, right? On any chain. Like when it comes to like Avalanche or AVAX or like Phantom tokens, I can't just bridge that to like some chain and like use it as collateral to farm with. So I'm starting to like jive more with the idea that ETH is money, ETH is a store of value. And I don't mean this video to be like a video about like, oh, I'm selling everything into ETH, right? Like for me personally, like I rotate from like Avalanche, Phantom, Polygon, like all these chains in order to stack more ETH and Bitcoin, because ultimately I see those two being the top two for however long. I truly believe in Bitcoin and ETH. So I just wanted to clarify there. But yeah, like go for it.
Oh, I was just gonna say I would completely add on to that. Like it's from watching your content and being in the private group, it sounds like you're great at like timing these moves between where the hype's going. Like I'm personally not good at that per se. Like I try to follow you when I can, but for me personally, like I hope people take this presentation in the context of like a 5-year time span and above. So like I wouldn't build it, do any short-term trading off of this. I wouldn't leave Phantom to buy ETH. I wouldn't sell your AVAX to buy ETH. I'm personally taking a very long-term perspective to things, and I know like that probably isn't the best play I could do, but it's what works for me. Cool. So if this resonates with you and you're looking for the highest yield on ETH, these are going to be three things you can do on layer one. So they're gas intensive, not meant if you have a very low balance, you're probably not going to come out on top after ETH. But with that said, let's just get into it and
Yeah.
start covering these. So
So right before you get into that, like, so do you have like a recommended portfolio size? I know it's like it's not perfect, but like 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 a rough number to say like, hey, if you have less than X dollars to play with, it's probably not worth to use Ethereum, because not only do you have to like stake ETH or provide liquidity, you have to claim the token, which takes gas. You have to approve the token, which takes gas. The swap, which takes gas. And
yeah.
like it like really eats into like your profits. Like if you're using the ETH mainnet, so like, do you have like a rough recommendation?
Yeah, sure. Yeah, a couple things on that. And this is like one of the things that disappoints me the most. Like I wish everyone could have a good experience on ETH, but unfortunately that's not the case yet. But I do believe we'll get there. So two things I would recommend. The first on that note is to track gas prices for ETH. I have a plugin here. I'm not sure if you can see that, but I will send Taiki a link. It's a block native ETH gas estimator that you can install on your Chrome browser and track gas prices and only make swaps when gas is low. There's also an iOS app that I can share with you that'll basically send you a notification when gas hits the lowest price of the day. So I hear a lot of people in the community saying like they save all of their swaps to Sunday evening because everyone's in bed then, no one's doing anything, and that works. But as far as a minimum portfolio size, I think I hear like the general consensus is unfortunately like a value as high as $10,000 if you're going to be making a lot of transactions. So if depositing ETH or you have deposit ETH and there's a lot of claim transactions and selling your rewards back to ETH to stack your position, like at that point you probably need a balance that's in the five figures, which is unfortunate. And at the end, towards the end of this video, right after I go over the highest yields on ETH, I'm going to talk about Arbitrum. So if you want to be in that ETH ecosystem, you can farm on a layer two, which is obviously more beneficial from a gas perspective. Cool. So with that said, the first thing I wanted to show you guys was Ondo Finance. I'll just make sure I'm connected here. So Ondo essentially allows users to deposit a single-sided position. And if we look here on the active page, it'll become a little bit more clear. And also I have a full video on these three projects if you want to check out my channel. And I have a full breakdown on this that I just don't have time to cover right now. But essentially Ondo manages a liquidity position for you. So if we just take this Sushiswap position, for example, you can see here that users have the option to either deposit just ETH and get a fixed yield on ETH, or they can get a variable yield on Alchemex. So me personally, I'm obviously bullish on ETH. I deposit just ETH into this vault, and that's going to give me a fixed guaranteed APY of 30%, which is obviously like a great yield for ETH, almost best in class. And the way it does that is because it's basically pushing all the risk from that liquidity position yield onto ALCX stakers. So if you have the Alchemex token, if you're very, very bullish on that, or of course you can see there's YGG, Convex, etc., you can deposit that side of it and you get paid off in a much higher APY, but you only receive that APY after ETH stakers get paid out their 30% or 25%, whatever it is first. So for me personally, this is a super innovative way to handle liquidity. The other benefit here is that the impermanent loss, it doesn't go away, but it gets pushed from the fixed yield depositor onto the variable yield depositor. That fixed yield depositor is always going to get 30%. It's the variable yield position that you can see fluctuate. So on the right column here, you can see there's some returns of 150%, some of 380%. And I'm just a big fan of this project. It has 3 audits. I've spoken to the team. They're great people and definitely building something innovative. In addition, the other benefit of using this is that it auto compounds your position for you. So rewards are quite high here on Sushiswap. They're actually farming on Sushiswap for you and then frequently auto compounding to build out the position. So in my opinion, I think this is one of the best ways to get a yield on just single staking ETH. But of course, you can also track what other vaults are coming that support other tokens. See. So next up, I wanted to cover Element Finance here, excuse me. And what Element essentially does is it gives you a fixed yield or fixed APR on an asset. So you can deposit yield-bearing assets like Curve's staked ETH token, which is ETH2 staking token put into Curve. You can deposit that here for a fixed yield. So they have a couple terms of when they end. Right now, there's an October 15th pool that's earning a fixed APR of 8%. and they have one that expires much further out, getting 4.8%. And the benefit here is you're getting a fixed yield, so you're not taking a risk on if the market goes up or down. If yields are really bullish, or excuse me, if there's a lot of hype and people are taking out leverage and pushing yields up, you don't have to worry about that. You're locking in your fixed yield. Now, the other thing I wanted to touch on about Element and Ondo actually is that both of these projects don't have tokens released yet. Now, I don't have inside information, like it's impossible to know for sure, but pretty much every project in this space airdrops to past users. So I would say if you have the capital to pay for gas, like it just makes sense to use Ondo Finance and Element Finance. Like not only are you getting a great, safe, conservative yield on ETH or whatever you choose to deposit, but you're also potentially getting an airdrop from in Element tokens or Ondo tokens when they release it. So again, that's of course speculative, but it's probably worth, being in everything. I hear a lot of people say like just try out every project because there's probably going to be an airdrop. Yeah.
Yeah, and just to clarify, so this is Lido staked ETH, right? So are you like, if I were to do this, am I earning 8% on top of like whatever the staked ETH position accrues, right? I think staked ETH pays like 8 or 9% right now, right?
I think it's probably about 5% now,
Okay.
but you don't actually. So what happens is when you deposit your staked ETH into the curve pool is already factoring in like that curve APR in staked ETH rewards. So it's all already factored in, but that would be awesome. But if you are interested in doing something like that, that actually ties in next with the third project I want to cover, Abracadabra. So Spell, MIM, this has seen a ton of hype lately. Taiki and I have been talking about it a little. Like we're very bullish on this project. Well, I shouldn't speak for him, but we're fans of it. I think it's super innovative, and I saw he tweeted out that it might flip Maker, and I hope it does because they're pushing the boundaries. So Abracadabra essentially allows you to deposit yield-bearing assets and borrow against them. Now, just because we're talking about ETH, I'm going to focus on the Yearn Curve staked ETH vault. It's a bit confusing, but this is essentially a Yearn token, so it's auto-compounding that staked ETH token. And you can deposit, let's just say you want to deposit one of those tokens here. You can then borrow, you have a couple options. You can borrow stablecoins against it. And the nice thing here is that your collateral position is going to be constantly growing, paying down your debt or decreasing or increasing your collateralization ratio. So you're always going to be getting more collateralized as time goes on because you're earning a yield. So you can of course do that. But if all you're interested is getting a yield on the deposited asset, you can actually choose to allow Abracadabra to auto loop your deposit for you. So if I just want to stack ETH, I'll hit this change leverage button here, find a level I'm comfortable with, let's just say 5x or 6x or 7x. And right off the bat here, you can see you're going to get a liquidation price, which is convenient to track. And you're also going to see the APY you're going to be getting on basically single staking ETH, which is about 8.5% now, which is nice. So yeah, I'm a big fan of Abracadabra. Again, I have a full video on that. And I think Taiki's covered it a bit on his channel as well. I know he's very bullish on this kind of ecosystem of projects. So definitely a lot of resources there if you're interested.
Yeah, I'm a huge fan of Abracadabra and Danny and his team. It's Spell is a token I missed. And I feel like as a farmer, I should have caught this. Because being able to use yield-bearing assets as collateral, like to borrow I guess the decentralized stablecoin, which is called magic internet money. Like how funny is that?
Yeah.
I definitely should have caught this, but yeah, I know that like the meme of like spell flipping Maker. I think it's gonna happen. Like I feel like MIM is like a better stablecoin than DAI because DAI is not really decentralized because half of DAI is like backed by USDC. So like I'm not gonna go over it too much in this video. That's outside the scopes of it, and I'll cover Abracadabra in the future. But it's a great place to just I guess use yield bearing assets as collateral, borrow dollars against it, and I feel like Abracadabra, when you borrow, I think you pay like a 2% interest rate or something along those lines. But most often, like your collateral is like the yield that you're earning on your collateral is like going to be higher than 2%. So assuming that the token price doesn't like immediately dump, like your collateral is kind of paying off your loan, not directly but kind of indirectly. So. Yeah, I'll talk about more about Abracadabra. I'm gonna try to have Danny on the channel because I think what he's like building is like crazy, and you want to be long innovators in the space.
Yeah, no, absolutely. I'm in complete agreement. Like, I don't know why someone would deposit into Maker and pull out DAI when they could use Abracadabra. You just have more flexibility with your assets. You're getting a yield on it. The only thing you could say is Maker's been around for so long, there's less smart contract risk, but I think Abracadabra has so much TVL in it that it's probably a safe bet. So I'm in complete agreement. I was disappointed when Maker basically made DAI wrapped USDC. But again, that's, like you said, it's probably another conversation. So I know a lot of folks are priced out of ETH, so I did want to touch on the best farms on Arbitrum right now. If you just want to play around, if you want to move some of your ETH from mainnet over, yeah. So the first thing I want to show you is just this resource here. I know Taiki covers it, but I use it as well, and it's DeFi Llama, and you can search. You can basically search chains by the highest amount of TL, and you'll see here if we click on Arbitrum down there, it will actually rank the most popular applications on DeFi Llama. So if you find yourself watching this video in a month and things have probably changed by then, there's going to be a link below, and you can click this out and see what the most popular apps are on Arbitrum. But with that said, I just wanted to cover a few today, what's available right now. So the first project is called Synapse. And Synapse is basically a bridge between Arbitrum, Ethereum mainnet, and other layer ones. And the main reason that this was built is because the layer twos like Arbitrum and Optimism, they actually have a 7-day period that it takes to withdraw your ETH or other assets from layer 2 to layer 1. Now, this is done for a few technical reasons that I won't get into, but the good news is there's been many projects that have basically allowed for instant transfers between rollups like Arbitrum and Optimism and Ethereum mainnet. One of them is called Synapse. There's also another one called Hop Protocol, which I'm a big fan of as well. Hop Protocol doesn't yet have a token. If you want to play around with providing liquidity there, I would definitely recommend it. But right now, Synapse actually has some great yield farms. So if we go over to pools here, we can see that you can actually get a yield on ETH, on stablecoins. And what you're basically going to be doing is you're going to be providing this liquidity to allow people to instantly bridge from ETH mainnet to Arbitrum, let's say. So in this case, you could deposit NETH, which is the Synapse Protocol ETH equivalent that is a bridge asset that allows users to bridge instantly. So you can, on layer 2, deposit ETH and get a 10% APY. And again, your cost to enter this are probably going to be, I would say, under $5. It's tough to say right now what gas prices are in Arbitrum, but probably under $5. So pretty negligible there. And you can see there's also some other yield opportunities on different chains. And you can see they support Phantom, Polygon, BSC, Avalanche. So if you find yourself on Phantom, maybe Yieldstrap 2 months from now, and you want to go to Arbitrum or you want to go back to Avalanche, this is a great way to do so. Very convenient, very trusted. Yeah. So the next protocol I wanted to cover was GMX. Now this is kind of like a fully decentralized DYDX. So we're seeing these layer 2 solutions that weren't possible on layer 1. So GMX is a perpetuals product that follows an order book model. Now, the order book is not something you can really do on a layer 1 just because it would be so intensive on the network. So that's why Uniswap has built this model of algorithmic liquidity, XY equals K, constant product. But we can actually have the order book model on a layer 2. So this allows you to go, you can see I have 2 ETH in this layer 2 account on Arbitrum. And actually, I can decide to pull out leverage on any of these 4 tokens here. They're obviously adding support for many. But if I'm very bullish on Uni, you could say, for example, I could decide to take out, let's just say 25x leverage on Uni, which is probably very aggressive, crazy, and you have a very high liquidation price there. But the point is to show you that DYDX is doing a great job. They're building as a layer 2 on Ethereum, but there are other solutions that are comparable to DYDX coming out. And GMX is very low market cap right now, but it is the true decentralized solution for perpetuals. And so there could be something compelling there. In addition, they do have yield farming. So if you're bullish on GMX, you can stake GMX, and you can also provide liquidity with GLP. So that's one project that I think is very interesting. I think this would be comparable to Mango on Solana if you're familiar with it. Now, next up, we have Curve on Arbitrum. Let's just make sure I'm connected there. Cool. So everyone here is familiar with Curve. I'm sure Taiki talks about it a lot. We all love farming on Curve. And you can see their try crypto rewards are pretty standard, which are good, but they're 22% or so on try crypto, which I think is pretty normal for Curve. You can see they also have a couple of other pools here, but incentives are just coming online. So there's only 3 pools that are incentivized now, but I do expect that to change in the future. This kind of brings me to another topic that Taiki and I were talking about. It's like, why doesn't Arbitrum and Optimism, why don't they have tokens right now? Well, I think it's pretty clear they will have tokens. It makes for just a better ecosystem in general. You can distribute governance better. You can truly become a DAO. And of course, investors put their money into Arbitrum and Optimism and they need their exit, and the token is the exit. So I think we will have a token. And like once we see the Arbitrum token live and we have an Arbitrum incentivized Aave pool or money market, or we have an Arbitrum incentivized curve pool, that's when like this ecosystem will explode. And I know that's Taiki's patented humble farmer thesis. So I'm very excited for the Arbitrum token whenever it happens to come by.
I mean, there always has to be exit liquidity for the VCs.
Absolutely. Yeah. Um, so next up, obviously, you guys are probably all familiar with Sushiswap. It is a DEX that was a Uniswap V2 fork, but has kind of built out their whole ecosystem of products now. And you can see here that we are on Arbitrum, so Sushiswap is on Arbitrum. And they actually have some pretty high APR farms. So we were just talking about Abracadabra, and right off the bat here, the highest APR farm is a 225% APR on Spell ETH. And this is probably like a pretty interesting pool for most. If you're bullish on ETH and you're bullish on Spell, this might make sense. And you can see the rewards are split between Sushi tokens and Spell tokens. So this might be a great option for you. This is a stablecoin ETH pool. MIM is the decentralized stablecoin from Abracadabra. So we have this, we have etc. So I'm sure Taiki's gonna cover this as well.
Yeah. So just to interrupt you, I don't know if the recording was laggy, but you kind of cut off. But yeah, like MIM, the Magic Internet Money, is like the stable coin that like is from Abracadabra. So it's over collateralized. I consider it safe. So 100% on ETH stablecoin pool is pretty good. And yeah, like thanks for sharing. Like, the Spell ETH pool looks great. I mean, it has like almost 200 million TVL like combined. So yeah, that's a great place to farm.
Yeah. Yeah, no, I'm probably on the more conservative side, so like I'd be nervous to buy Spell after it's done so well now, but I am tempted to enter this pool, so we'll see. Um, yeah, next up, I wanted to talk about Dodo. It's kind of a smaller exchange that they're really pushing their layer two strategy, and I think they might be on Avalanche and Phantom as well. I'm not sure, but they actually allow single-sided liquidity for a few different pools, which is pretty compelling because you're not getting impermanent loss exposure, which obviously some folks really do worry about. And you can see here you can get 8.5% single staked for WBTC, 10.7% single stake for ETH, and 22.7% single stake for USDT. So these rates are pretty aligned with like what most would consider like best in class rates. I'm sure you can probably find higher for stablecoins, but yeah, I think this is super compelling. And then they also have incentivized farms for non-single staked pairs. So you would be taking on IL, and these are some more niche tokens that like I'm not familiar with, like MCB, DF, QSD, etc. So there's some risky farms out there, but there are also some conservative single staked IL free pairs that might be of interest to folks. Now, next up, there is Beefy. I'm sure all of you guys are familiar with Beefy just because it's been on every chain. So I think it was on Polygon, it was on BSC, it's on Phantom, Avalanche. It's really everywhere. It is an auto compounder. So basically, you're paying a somewhat small fee to allow Beefy to auto compound your position. So if you just want to set and forget that Spell ETH pool we were talking about, you just want to stack Spell and ETH, you can do that here. And you can see the APYs are quite high. Obviously, don't expect these APYs to last long, that the farm's not last a year, that APY is not going to last a year. But if you're not even lazy, but if you don't want to check these pools every day and recompound, Beefy is probably a great hands-off way to do it. I don't think they've had any problems with exploits on all of the chains they've been on, so probably more on the conservative side for an auto compounder. You can see they also have the dry crypto curve pool, which is pretty compelling at a 42% APY.
Yeah, just to clarify, like
and the last thing I wanted to
sorry, just to clarify, like how auto compounders work is that like when you provide liquidity, you get you can claim tokens like for free. Like that's part of farming. But these auto compounders will automatically harvest your your gains for you and then redeposit it back into the pool. So you don't have to pay gas. You don't have to like worry about like claiming, redepositing, etc. Like you're just like outsourcing that, like all that work to Beefy. They'll take a cut, but it'll like make life easier essentially.
Yeah, I think their cut is probably the same as urine. I have to look this up, but my hunch is it's 2% of the position over a year and then 20% of the profit. So I'd imagine Beefy's doing that as well. And I think you had a video on this as like weighing out if it's worth using an auto compounder when network fees are so low. So it might actually be worth it on Arbitrum if it does cost, say, $5 to auto compound, but on Polygon, it probably doesn't make sense when it costs under a penny. So
Yeah, there was a
yeah.
mathematical proof actually of like if you're on Polygon, you should just do it yourself because it's like 0.00005 cents to claim. But if transaction fees are like a few dollars or even like a quarter or something, then it kind of makes sense to just outsource that to something like a Beefy.
Yeah, awesome. So the last thing I wanted to cover is a homage to Taiki's humble farmer thesis. So right now we don't really have like a true Aave or compound. We don't have that like tier one money market yet on Arbitrum. Of course, that will come. All of your favorite projects on Ethereum will be on layer two. All of the ones that are aligned with Ethereum will be on layer two. So it will come, but like if you need something like that now, I did notice there is an app called dForce out yet. I haven't used this yet. You can see TVL is probably about 50 million, so it's on the smaller side. But you can see here that you can actually deposit assets like ETH, BTC, Uni, stablecoins. You can borrow against those on this money market on Arbitrum. So if you need an option for that right now, you can do that. But I'm more conservative. So for me, like it would probably be worth eating the gas costs and using let's just say using Aave on Polygon and then bridging your withdrawn assets back to Arbitrum, which you can do with Synapse. So I'd probably steer clear of this. Use Aave on Polygon if you're conscious of gas, or on mainnet, or even on Avalanche now, or Phantom. So you can do that too, and then bridge over to Arbitrum if you want to try some of these farms. So those were all of the apps I wanted to cover. Really, if there are any questions, I'm happy to answer those. If you want to keep chatting, let me know. Yeah.
Yeah, thanks for that. Yeah, thanks for showing us the Arbitrum farms. Like me personally, like like I feel like even $10,000 is like not enough to use ETH
Yeah.
mainnet unless you're like putting it somewhere and like waiting for like 5 years or whatever, or like cover like a super long time period, time horizon. But Arbitrum definitely, I bridged some funds over to Arbitrum just to check it out. But to be honest, like there aren't really that many apps live, right? Like even like Aave
Yeah.
is not out, stuff like that. So like, why do you think Arbitrum hasn't popped off compared to, I guess, other, like lower transaction fee EVM chains? And like, when do you, like, how would you hypothesize? Like, when do you think more activity will come onto Arbitrum? So good.
Yeah, no, it's a great point. The first thing is that like Arbitrum is very new, right? It's been really live for I think under a month. And the second thing is Optimism actually has a huge upgrade that almost puts Optimism in their final state at the end of October. So I think that's going to be a big catalyst as well when we'll have Arbitrum and Optimism competing. And my hope is there that that will put pressure on both of these layer twos to finally release their tokens. I personally think it's pretty much a given that they will have a token. It really just makes sense. They have a huge exit. They get to decentralize the project and they get to incentivize liquidity. Like it's a win-win-win. So my hunch is that these layer twos you're seeing, Arbitrum and Optimism, will be valued like as high as some of these other layer ones like Phantom and Avalanche. There's going to be a ton of hype there when these finally launch. Like the ETH Maxis or the really decentralization maxis, I guess you could say, are really excited about that and will speculate on that. So I think when we see them launch their token, when Arbitrum goes to Aave and says like we're ready for you, here's our token, we're going to incentivize the launch and provide incentives on Aave, I think it's going to be of hype, like full of hype, like a pretty crazy event. And so I'm very excited for that. I totally agree with you. You probably don't have to be on Arbitrum now unless you want to make sure you get an airdrop if they airdrop Arbitrum tokens to current users. So maybe it's worth putting a little funds on there just in case. But right now, like I think your approach totally makes sense of staying on Phantom or Avalanche or wherever it makes sense to liquidity mined with low fees. So I don't think there's a huge rush to get to Arbitrum, but I am pretty bullish that Arbitrum and Optimism are going to be like a huge play for Q1 or late Q4 this year.
Awesome, awesome. Yeah. And I feel like one of the other reasons why it hasn't popped off, I mean, you kind of touched on it, but it's like because they don't have a token, they can't really
Yeah.
incentivize liquidity, right? Like one of the reasons Avalanche and Phantom has popped off like recently is because they have incentive programs. They have their own token, and they could say, hey, if you bridge over, we'll give you free tokens, right? That's essentially like the reason I bridged over, because hey, like if these foundations like want to give me free tokens for like using Aave or like using some safe protocol, then like why not take it? So like, what are your thoughts on like that? Because I feel like farmers like myself, I don't know if I really add value to ecosystems like in the longer term, because I kind of rotate these ecosystems. Like I was on Polygon, then Avalanche, and I'm on Phantom. I mean, I'm still on Avalanche to some extent, but uh, people say like farmers are parasitic to ecosystems because they just take the tokens, sometimes dump it, and just leave. Like, do you think that's like an advantage ETH has, I guess, or is this like how would you think about that? Like, would you say tokens like Arbitrum or optimism tokens is like would that be like a farm and dump thing, or like what are your thoughts on like the parasitic nature of farmers in general?
Yeah, no, I think so. I'm a parasitic farmer as well too. Like I'm always trying to compound my core position, and I'm going to different chains to do so, like yourself. And I think that's okay. Like these chains are encouraging that, right? They're completely supporting that. My hunch is though it probably doesn't pay out for the network in the long term. Like I don't know if Phantom's crazy expensive $170 million or so liquidity mining incentive will add that much value, like true value, not just TVL, back to the ecosystem. I don't think it really worked for Polygon. I mean, maybe you could argue that TVL is continuing to rise, but I think if you look at the token price, it's probably not panning out for Matic holders, and that's my hunch is what's going to happen with most of these incentive programs. I think the same will be largely true for Arbitrum and Optimism if and when they do launch their tokens. I don't think they're immune to the crazy speculation and the dumping that's going to happen. But for someone like me personally, like obviously I'm bullish on the ETH ecosystem. I probably am going to keep some of my core Arbitrum rewards and sell some of them off. Um, but yeah, I don't think it's going to be any different. But I will say I would expect that Arbitrum and Optimism probably will have different incentive programs that maybe require a locking of collateral up. Like you can't just farm and dump. Maybe there's some more advanced incentive program there, or maybe they follow the Phantom model of saying we're going to pay developers to attract TVL. We're not just going to give it to the end user directly, which I think is more sustainable. And props to Phantom for doing that.
Yeah, that's like one of the things I like about Phantom. I feel
Yeah,
like with Polygon and Avalanche, they just pay current ETH-based applications to like come on, whereas Phantom is saying, hey, like if you can create a protocol that can sustain like lock and sustain liquidity, like we'll give you these tokens vested over 12 months. It's up to the developers to like give it away to users or maybe keep half to themselves, like pay themselves and then pay the other half to users and whatnot. And like if you like I bridged over to Phantom and like most there's like a lot of native applications, right? Which kind of feels kind of degen, which like it kind of feels like the Wild West because I don't really like I can't really use like Aave on Phantom because there is no Aave.
yeah,
There's an Aave fork, which will get incentives, but which kind of adds to the excitement, but also like I guess it's kind of makes it risky. And I think all these foundations, they're just like trying to figure out the best model, right? Because Polygon kickstarted it with the $100 million DeFi for all fund, or maybe it was $150 million. And then like Avalanche was like, oh, that was cool. Like, let's do a bigger one. And then Phantom was like, okay, like we hear you guys, but we're gonna pay devs. And then like Algorand has one, Harmony has one.
yeah.
I think Hedera Hashgraph has like some $1 billion thing, which I don't know how they're gonna fund that, but like they announced it. So I think like you don't really have to bet on the winners like right now in the short term, right? Like maybe in like 5 years, 10 years, it's like, yeah, like ETH will take over if and when they scale. But in the short term, like I think being an opportunity maxi, a profit maxi, just like general, like farmer in general, just there's nothing wrong with like hopping on
Oh
and off
yeah,
these ecosystems, collecting rewards, and it's up to you. Like you can dump it for ETH, Bitcoin,
yeah.
stables, or you can just collect it and like just like have a moon bag, as they say.
Yeah. The one closing thought I'll leave there is, and we've talked about this offline too, is like if the layer twos, if Arbitrum had every app that you need, if it was as cheap as say Phantom or Avalanche, like what purpose did these other chains serve? And so I think like the chains are really pushing out the other layer ones are pushing out these incentive programs because they realize like we have to do this quickly. If we're going to attract a user base, if we're going to be a significant layer one in the future, we have to bring people in now. Because like maybe in January 2022, everyone is just on ETH layer two. You're not on ETH mainnet, but like you're still locked into that ETH ecosystem and all of the apps you want are there and it's at a very low cost. So I think it's going to be a very exciting 6 months. I don't think it's set in stone yet that there's one winner, but I'm excited to see how it pans out. And for now, I think ETH is in the lead.
Awesome. Yeah. So yeah, thank you for your presentation, sharing like all the farms on ETH, L1 and L2. So can you just let us know like like what are you most excited about? Let's say in the next 6 to 12 months, as it relates to just crypto, DeFi, or just like Ethereum in general. Like, what are you like most looking forward to?
Yeah, for me, I'm most excited about the merge when we transition from a proof of work ecosystem to proof of stake. It's never been done before. It's not without risk. This is like a huge transition, and there's hundreds of billions of dollars locked on ETH, whether it's in stable coins, WBTC, etc. So there's a lot of pressure on them to get it right. I hope they will. I'm confident they will, but when we make that switch, it's going to be a huge supply shock to ETH, almost like two. I think it's been equated to two BTC halvings. We've already had one after 1559. So I think it's going to be an interesting catalyst. And I'm most curious to see if BTC and ETH will decouple. Maybe like BTC goes up a ton and ETH follows, or vice. Like who knows how it's going to happen. But right now, BTC and ETH are like 80% or 85% correlated. They follow each other. Really, ETH follows BTC. And I'm curious if at any point, whether it's ETH, Avalanche, etc., if this cycle we'll see someone outpace BTC and decorrelate from them. Because it doesn't really make sense that BTC sets the market, but it does for now. So I'm excited to see what happens there.
Yeah, that leads to my next question is when when flip? Like when do you think ETH will flip? If you think it'll flip Bitcoin.
Yeah, if we're still in this cyclical market where like we're gonna have another year or 6 months of bull market and then go to a bear market, I don't think it's gonna happen this cycle. Like the market's certainly not rational yet. Like we saw it with all these incentive programs happening. Like it just didn't make sense how token prices were going up and down, etc. It was like very sporadic. So I think probably not this cycle. My thinking is it could be next cycle, but I wish I knew. I'm not great at speculating on price like that.
Gotcha. Okay, awesome. Yeah, thank you for coming on the channel, and I really encourage everyone to subscribe to his channel. I'll provide a link in the description below. But for those that want to get to know you more, like, do you have other like social media links, like on Twitter, Discord, etc.?
Yeah, I can share with you my Twitter link that you can link below, and then I'll also share my Discord link with you if anyone wants to join the community. It's free. It's a great resource. We're happy to help anyone out, and I'm pretty available there. So like if you ever tag me in something, 99% of the time I'm going to reply. So I hope to talk to you all there.
Awesome. Thank you guys for watching, and have fun farming out there.